got Wheaton Precious, we got IM Gold, we got Goldcorp, we got Agnico Eagle. We got the biggest gold mining companies in the world to become shareholders in the Tradewin Vaultchain.
Hello there, my friends. Chris Marcus here with you for the StockPulse Network today, and I'm excited to have one of my favorite investors and someone who's been a good friend to me for a long time. Is Rick Rule, who was kind enough to join us on the show and has been speaking at the conference today. Rick, how are you, my friend, and how's everything going so far this week?
Delighted to be here, delighted to be on with you, delighted with your progress over time. Everything's good.
Well, I sure appreciate that, and think something investors would sure appreciate hearing about. Obviously, we've been sitting here watching gold and silver during a reign of unprecedented money printing, yet the metal's sitting there, and I think people are wondering, which you're well qualified to speak to, if you're tired of just sitting waiting for bullion to move, what are some of the other opportunities in terms of finding income and investments that, while the wait goes on, people can still look into?
Three comments to that, not surprisingly. The first is, if your life and your savings are denominated in some currency other than the US dollar, gold has done very well for you. So it's important to note that if you're disappointed with the gold performance, you're being extremely ethnocentric. If you're outside the US, gold has done extremely well for you.
Right.
That's the first point. The second point is that gold traditionally does well in times of unrest. I would suggest that for US persons, the unrest that you need to be wary about is, of course, the US Treasury market. But the point of that is that many times clients say they can't wait for $5,000 gold. And I suggest to them that $5,000 gold would usher in a set of circumstances that would be very unpleasant in the rest of people's life. So be very, very, very careful what you wished for. Having done my disclaimers, I'll try and answer your question now. First of all, there are some interesting opportunities in the gold space itself, not the least of which you've been writing about, our Vaultchain product, our joint venture product with IEX, which lowers the cost of gold ownership and makes gold ownership much more convenient. But beyond that, there are always opportunities in a sector as broad as precious metals. I would point out as an example that we've been in a stealth rally across the resource sector for 18 months in the very large cap natural resource names. The Exxon Mobils of the world, the BHPs of the world, the Barricks of the world, certainly in the last 2 months. And one opportunity that comes to mind, actually we talked about this years ago, you may or may not remember, but if you build a portfolio of the biggest and the best of the best, when you come into a bull market, because natural resources are so volatile, you can get doubles and triples on the best of the best. If you aren't suited to penny stock risk, one thing that you might consider is buying 10 of the best and relaxing. And right now, with the volatility index, the VIX so high, one of the things that you can do with that is sell short-dated puts and calls around core positions and monetize that volatility. I've been doing this when volatility was high for probably 30 years, and allowing the market to pay you to buy low and sell high, something you ought otherwise to do for free, right, is a unique opportunity and something that your readers might begin to familiarize themselves with.
Right. And you mentioned yesterday during one of your talks as well the idea of buying some of the superstar companies that are out of favor. Again, in today's investment market and Wall Street sentiment, there's a little bit of a buy high, sell low mentality, right, but you like the other way, which you can comment on that.
I can't help myself. By nature, I'm a lender. Right. I'm a contrarian, so I'm concerned about absolute values rather than relative values. As a speculator, and I laugh, everything I tease speculators, but everything I now invest I made by speculating. So my teasing is disingenuous. Right. A lot of my speculative success over 40 years has come to do with the fact that I've learned that probably 4 or 5% of the management teams in the space deliver almost all the value. And finding the great guys and forgetting about the pretenders doesn't guarantee success, but it's a great guard against failure. And simply guarding against failure over the long term is one determinant of success. Warren Buffett, who everybody likes to quote because he's so smart, points out that around the world millions of people can play basketball, millions. But if you want to win a game, you got to have a couple of 7-footers.
Right.
And the truth is, in times like this, when nobody cares about the markets, you can get the 7-footers for wholesale, not retail. Never mind fairy tale. The idea that you can buy the best of the best for the same price that you're paying for the lame, the halt, and the blind, why wouldn't you do this?
Right, right. Yeah, and especially one of the things that I appreciated that was a focus that Rick had a great conference up in Vancouver, the Sprott Symposium. Right. And it's a little bit new to me, but looking into uranium I found fascinating, especially right. You had Amir Adnani there, who great speaker and been learning a lot from. Any thoughts on the uranium market and where you see that headed forward from here?
For patient people, who often aren't speculators, but for patient people, I think uranium is unique in that I see it as a when question, not if question. Right. It's going to happen. It is inevitable, it may not be imminent. Let's do the arithmetic. In the United States, although people hate uranium, right. and they believe that they can afford alternatives, things like solar. There's a problem with solar, it's called night. When the sun doesn't shine, it's a challenge that they're having a difficult time overcoming. But returning to uranium, uranium provides about 16% of US baseload power. Mm-hmm. I've been told by various people in the know that a 3% shortfall in baseload demand can lead to brownouts, okay? So remember those two numbers. 16% of US baseload power comes from uranium. Mm-hmm. In the uranium market today, we make the stuff for an all-in cost, including prior year write-downs, and cost of capital of $60 a pound. So we make it for 60, we sell it for 30. We do this 150 million times a year, and we try and make it up on volume. Right. The truth is, if your listeners believe that 6 years from now, when they hit the switch in the United States, that the lights are going to go on, they believe in higher uranium prices. Because if we don't have higher uranium prices, we won't have uranium. And if we don't have uranium, we won't have electricity. If you have one of these fancy new Tesla cars, if you believe that you're going to be able to drive your $90,000 Tesla, you believe in higher uranium prices, whether or not the narrative suits you. Right. Now, does the fact that it has to happen in 5 or 6 years mean it's going to happen in a year? Not necessarily. In order to play this game, you have to have the courage of your convictions, and you have to be willing to stomach 12 to 18 months volatility between here and then. If you're not temperamentally suited to enduring volatility while you wait for mathematics to make you rich, fine, stay out of the trade.
Although it could be the perfect investment for the silver bugs out there. We're already well conditioned and trained.
It could be that. It could be that. I would tell you that the silver investor, in my experience over 40 years, is a very narrative-oriented investor. And the narrative around uranium is all bad. When you get past the fact that the mines lose money, then you got to go to Hiroshima, Nagasaki, and 3 Mile Island. Right. The silver investors or silver speculators haven't had to deal with that yet. Mm-hmm.
Yeah, and it's one of the things that you've talked about through interviews over the years. Certainly I've learned during my own trading career where, especially if everybody in the crowd is looking at it one way, often that's where the opportunity, if you go and do your homework and see fundamentals that support a case, which seems like could be happening here as well. Also, you mentioned the Vaultchain. I'd like to go back to that real quick. Again, I write for Miles Franklin, so know Andy Scheckman and been involved on some level with that. If you could tell folks more about that, especially I think it's relevant to people who hold GLD or SLV where, you know, there's pros and cons, but it seems like a great product that you guys have made available to the market.
Chris, with the caveat that it's dangerous for an old guy to talk to a young guy about technology, I'll do my best. Okay. As you know, Sprott has been in the gold business for many years. And we have physical gold products, New York Stock Exchange products, that are wonderful products. We manage $4.6 billion, I think, on behalf of about 200,000 investors in New York Stock Exchange traded products. So we were in the physical precious metals business anyway. When we were looking at distributed ledger and blockchain-based technologies, one of the things that we thought was that one industry that looked ripe for disruption was the physical precious metals business. Yes. But at Sprott, we didn't consider technology to be one of our core competencies. We were delighted when the famous alternative exchange company, IEX, made famous by Flash Boys, approached us and said that they believed that the distributed ledger would change the way all securities and commodities traded, cleared, and settled.
Right.
And that they had worked out some distributed ledger technology and they wanted a partner in the commodity space. So we partnered with IEX to create a delivery receipt. I want to tell you, it's not a coin, it's not a token, it's a delivery receipt, which means it's not a security, it's not a currency, it's not a commodity, but the receipt is evidence of ownership for physical gold stored at the Royal Canadian Mint. You can exchange it peer-to-peer much more cheaply than you can buy or sell physical gold. After we perfected the technology, and in particular after we developed settlement and custody relationships with the Royal Bank of Canada, which none of our competitors have, we began to look for partners, and we got the largest gold wholesalers in the world. We got the big bullion dealers like Andy, who we know and love and trust from 20 years in the physical gold business. But probably more importantly, no offense, Andy, probably more importantly, we got Wheaton Precious, we got IM Gold, we got Goldcorp, we got Agnico Eagle. We got the biggest gold mining companies in the world to become shareholders in the Tradewind Vaultchain. And very recently, these big companies have test driven it. They have downloaded good delivery gold to the Royal Canadian Mint, received tokens for it and sold it, and saved a lot of money already over physical delivery. Right. So this works now. And
you were even able to figure out the technology and get it to work too.
And Chris, I can't tell you how important that is. The fact that a 65-year-old Luddite, a guy that's still in the met coal business, could, with his phone, establish an account, buy a delivery receipt, sell the delivery receipt, get back cash, rebuy a delivery receipt, and get physical delivery. If I can do it, you can do it in your sleep.
Yep. You've talked a lot, we had a lot of people talk on the show and in the conference, the value of the people you're working with, the teams, the management. Obviously, in my opinion, I think you've done a great job getting a lot of good partners together, but also having the Royal Bank of Canada.
Yep.
Because
I need to correct you, the Royal Canadian Mint.
Royal Canadian Mint,
The Royal Bank of Canada still sees us as a competitor.
Yes, that'd probably be less ideal. Although again, as an investor, that I've had questions about GLD or SLV of whether the metal is there to be delivered. But also perhaps in addition to the security, maybe you could talk a little bit about the fee structure between the two products, because the fees on the Vaultchain also come out to a lot less as well.
The onboarding fees will vary depending on who the agent is. We have about 20 agency agreements, so I would urge all of your listeners to compare.
Right.
The transfer fees from user to user are extraordinarily low relative to physical gold. And importantly, the storage and insurance fees are nil. There is no current competitor that offers no fee storage, transfer, and insurance,
right,
which we do. I need to say, if you're buying small amounts of physical precious metals, 10 ounces or less, if you are going to take delivery of precious metals, that can cost you 80 to 100 basis points. Now that's still a 65% savings,
right,
over the bullion community. If you are taking delivery of wholesale quantities, 400 ounces of gold, in custody, that is, if you leave it in London bullion market, good custody, good delivery form, the fees are extraordinarily cheap.
Yes.
They're laughably low.
Okay. In wrapping up, we've seen a lot of great speakers, a lot of information presented. What's something you'd like to pass along to investors, some challenging times that perhaps maybe they're not thinking of but would be well served to know going forward in this environment?
Two things. The first is that a bear market in financial assets is regarded as a sale with physical assets. And if you shop for financial assets the same way that you would shop for a suit or a car, you would think sales are good. It's odd that people who buy financial assets strive to pay too much. It's truly, truly odd. And to begin to think of yourself as a consumer of financial assets. I'm 65 and I want to get richer. I'm a buyer, not a seller of financial assets. Bear markets, while they test your patience, are over time the way and the place you get rich. The second thing that I'd like to talk to your people about is the fact that Sprott loves to offer, on an absolutely no obligation basis, the opportunity for your listeners to have us rank their natural resource portfolios. Any of your listeners who wish can email me their portfolio, just resource stocks.
Right.
I need, because I'm an old man, I need the name and the symbol and the text. I don't want a whole bunch of attachments I can't open. And I'll send those back to you by return email, ranking the companies and commenting on them where appropriate. My email address is rrule, that's R-R-U-L-E, at sprottglobal.com. So people who email me their portfolios, I will email back a ranking. This is not investment advice. These are company rankings, but I'm happy to do it.
I appreciate that, and perhaps the best way I could wrap up is that when I finally convinced my own mom about the whole argument for gold and silver and wanted to get someone besides myself to manage that, I came to Rick, and
Thank you.
It's been a pleasure getting to know you, studying everything that you're sharing, and having you on the show today. So thank you so much for joining us.
Thank you.
Look forward to the future.
Great.